everybody. Welcome back to the Exponential Finance podcast. Very excited to be here today with my first guest from the Baltics, who's Rolands Mesters, the co-founder and CEO of Nordigen. Welcome, Rolands.
Thanks for having me. Super excited.
I love history personally, so I took the opportunity to look back a bit. I was born and raised in Hamburg. It's where I spent the first half of my life, which has been one of the cities in the Hanseatic League. And Riga was a very big trading hub in the Middle Ages. So our joint history, if I may, goes back over 700 years because Riga joined in 1282. It's just amazing, this nature and this culture of trading from that long time ago. I think you see still today in Hamburg and in Latvia an entrepreneurial trading type of culture till this day as well.
Riga is a beautiful city, and the Hansa network has very much to do with the fact that we have so many nice, beautiful historic buildings. And we still feel that Riga is a great hub for multiple things that connect Europe and the East, the Europe and Russia, Europe, Belarus. And so a lot of exciting new technologies are born out of the fact that it's just very convenient to base things in Riga as a hub. Interestingly, a lot of FinTech activities and companies, the FinTechs that are based in Riga, Latvia, are also operating internationally. And there are a connecting hub between different regions, really the East and the West. So it's a pretty exciting place to be in.
Is there a history also of a good technical education, so it's relatively easy to find good software engineering talent?
Yeah, so there's definitely good technical background. The history of Latvia is, very much to do with the history of the Soviet Union, right? So back in the days, Soviet Union was very, very active on promoting education, technical education, and then the spillovers of that, of course, are all across the ex-Soviet bloc. So countries like Estonia, Lithuania, and Latvia included are very technical, and there's plenty of technical talents, and schools are very, very focused teaching maths to kids, which is, at the basis, I guess, of, several technical things. Recently, how the technology sector has been moving, there's some other exciting things that have developed. Latvia is historically, in the last 20, 30 years, has been heavily overbanked. So we had more banks than we actually needed. It meant that there were plenty of people who are actually educated about the way the finance works. They were educated about how lending works, how credit scoring works. And when you take this technical, natural technical capability set and this natural interest in this space and pair it with this professional approach about how finance works in general, and you have that tiny country where the population is actually not that big, very naturally you would move into the fact that you have this talent that wants to operate internationally. And we see a lot of our fintechs that are based here, they start with the Baltics as the basis, as the test market, so to say. And they move outside of Baltics, either east or west, quite fast because the markets are small, but the capabilities are huge. We're definitely not the only ones, and we're just a byproduct really of how the whole geography really is operating.
Being small can be a real advantage, right? If you look in Asia, you look at Singapore, it's a bit more than Latvia at 5.6 million people, but it's created itself as a stepping stone into at least, let's say, Southeast Asia, the ASEAN region. Estonia is famous for the e-citizenship, and so Latvia is then maybe a bit the Singapore of the Baltics.
Whenever you think about launching in Asia, you think about Singapore, and there's several reasons for that, but geographical location and the ability to travel back and forth with other countries is super important. And what has played a really good role for Riga is that very, very early on, there were a lot of flights to Riga from all across the places. And so that meant that we're super connected to Hamburg. We're super connected to London. Back in the day, when the world was a bit different than it is today, we had something like 6-7 flights to London a day, which for a tiny country like ours just means that if you want to go to London, you can do that essentially. You can make a decision in the morning and be there in the afternoon. And that just means that once you're so connected, it also makes sense to build out some hubs in the city, which definitely adds a lot. I mean, we're nowhere near Singapore, and there's plenty of other hubs in Europe. But yeah, Riga is a great place to be located in.
Wonderful. So we've seeded it with the ecosystem and the focus on technology and finance as you laid it out, which then feels almost naturally you had to start something like Nordigen. Maybe give a brief overview of what you do with Nordigen.
Sure, absolutely. So Nordigen, at its essence, is a data analytics company, and we specialize on a certain piece of data, which is account data. So from very early days, Nordigen has been specializing in building algorithms and analytical solutions to analyze, process, and do all sorts of other interesting things with bank account data. The beginnings of Nordigen was very, very different than it is today. So Nordigen was started about 5 years ago. We started when open banking wasn't really a thing. Arguably, you've had open banking since the 1990s, where Yodlee and Finicity launched. So banking connectivity was a solved problem. Clearly, today, you have other means to solve it. You have the regulators kind of making push to open up the banks with open APIs. But, banking connectivity was a solved problem. And so gradually, banking connectivity, starting from early 2000s, became more and more popular. Meanwhile, the lending sector and the banking sector figured out a way how to optimize credit scoring by not using anything anywhere close to open banking. And there's a great issue with credit scoring and credit data in general. So if you want to understand someone's creditworthiness, let's say you have customers that are applying for credit cards or consumer loans or mortgages, then you need to understand enough information about them to make a credit decision. And with mortgages, you have already been doing that as a process for several hundred years. Worst case scenario, you have the collateral, the mortgage, but with more modern tools like non-collateral lending, the digital loans, you really have to gather enough data, and you have to do that really fast so that you can care for the customers and approve them for these loans. And this is where the new world of the speed and digitalization and automation kind of meets the traditional world of risk. And with risk, if you don't have collateral, you need to know enough information about people to make a decision. But with the digital environments, you want to avoid having any frictions. And traditionally, for the last 100 years, banks and lenders have relied on credit bureaus to gather information about the loan applicants. But today, the credit bureaus, they feel very sort of limited, because you look at yourself, you're a citizen of the world. So you have been all across the world, and there's so many people like you who have generated credit histories across different countries. It's very hard for anyone who is in a similar position to verify their creditworthiness by just having the credit bureau data alone. And here where banks early on decided to have a nifty workaround, which is start asking for bank statements from loan applicants. And it doesn't matter where you're based, if you have a bank statement from your home country bank to verify your creditworthiness, that was a way to be able to understand the customer's income levels, the customer's active loans, and any other health indicators about this financial situation. And Nordigen 5 years ago, my co-founder, Robert, who's also my classmate in our university, we both studied finance. Robert was working at a fast-growing consumer lender, and he recognized that they were literally sitting on tons and tons of these bank statements, and realized that that's a problem that's prevalent all across Europe. And when you start asking other lending companies and banks all across the world, you see that this is exactly the same thing in New Zealand, this exactly the same thing in Australia, exactly the same thing in South Africa and in the United States. Interestingly, open banking wasn't still there, even at the level where it is right now. But there was an industry around bank statements and clearly a need for extracting value from them. And then that's when we decided to start Nordigen about 5 years ago. And so Nordigen, at its initial stages, was supposed to be the largest company in the world that focuses on analyzing bank statement data. And then now 5 years later, you realize how ridiculous that was, because clearly you have open banking now, because clearly you have the unregulated open banking in the US that's growing so fast. Then you have the regulated open banking in Europe that's already there, and companies are adopting it even more and more. And then you have similar initiatives in Australia and Japan. So this thing is growing very fast. And Nordigen became from company that focuses on bank statements to company that focuses on account information in general. So that's a short summary of what Nordigen is and how we came to be.
Fantastic. There's lots to unpack, and so we can do this step by step. When you say account information, are you truly sourcing only data from the customers that you have, or do you also augment it with, let's say, social media data, things that are available on like Facebook, Twitter from these folks?
We work exclusively with accounts information, and typically there's several use cases that are most popular with our solution, and I guess they're representative of where open banking is today in Europe. Open banking in Europe is really today a lot about creditworthiness. And coming back to the problem of that credit bureau data is perhaps an incomplete picture of the modern European person, right? Open banking data is definitely augmenting that information. And we see that many companies who used to rely exclusively on credit bureau data have started to use bank account data as well, either in parallel or perhaps in some cases even replacing the credit bureau data on loan decisions. The role of Nordigen since early days has been to help these banks and lending institutions, and now increasingly also more fintechs, to just work out what do you do with bank account data once you get it. Because what you get is really unstructured information directly from a person's bank account. You know your own bank account, right? So you sometimes have transactions that you can barely recognize yourself. So let alone for a machine to do that automatically that's sitting in the bank that hasn't seen your data ever before. So what we do is we help them to do things like transaction cleaning, to figure out which parts of transactions they actually don't need and that they add noise and they don't help a lot. And there's things like transaction categorization, which is a process of figuring out the purpose of a transaction. And then there's things like looking for behaviors within inside a person's bank account data. So one of the simplest form of behaviors is, so what's your income? How do you receive your income? Is your income stable? Is it regular? Is it growing or is it decreasing over time? And that income alone is a thing that you cannot see in credit bureau data. So, the German Schufa does not have complete income information. The UK Experian is also very limited in that regard on the traditional credit bureau services. And so open banking definitely opens up the fact book about what is the income level, but it also opens up other things. Are you a person who saves or are you a person who is spending everything you earn? Are you making investments for future or are you living for today? And so those kind of things you can find that information in bank accounts. And so what Nordigen is doing, essentially, we're building internally a set of libraries and tools to help these banks and lenders to answer these questions. And we do that exclusively on bank account data. And from one side, it's a limiting factor, of course. We're very focused only on one set. So we're not a general purpose company by no means, but I think that allowed us to build really world-class products in a specific niche of bank data. We're solving one problem, but we do that in today about 19 markets. And we have a sort of relatively small team behind it, which allows us to focus on one thing, but do it really well.
Got it. To play devil's advocate on this a bit, and that's maybe my American experience where people are extreme users of credit cards. If I look at my bank account at the end of the month, I might have cases where it really have only two transactions. One is the deposit of my salary and then paying my credit card statements. And so that's where you naturally would hit a limitation then. Do the same that you do for bank account information for credit cards as well, because fundamentally it's very similar process to go through for the enrichment.
Nordigen, in essence, is a company that works with all sorts of transaction data, and transaction data could be debit cards, could be credit cards, could be mobile wallets. We've done projects all across the world, really, where transaction data is literally anything with a description field, a date, and some amount. To touch upon your point, so how does a bank or a lender understand someone like yourself who has only perhaps two transactions in a bank account is really a question of what kind of data does a bank or a lender require to understand your creditworthiness. And then the next question is, well, how do they communicate this to the end user, to the customer, to yourself, that, which data should you provide to verify your creditworthiness? The big challenge for open banking that has always been there is, well, how do you explain to the end user, how does open banking work and why do you need access to anything? And why do you need access to their name, or why do you need access to their credit bureau report? And then open banking has the same challenge. How do you explain to the customer that to verify their creditworthiness, you need to have access to some information about income, but you also need information about some other financial whereabouts, like how they spend the money and what are their spending habits, so that they can provide the services, financial services that the end user wants to receive. Some of the questions debated on the industry around how much information do you actually need, and how do you limit the scope of information that you request from end users so that you don't ask for too much information. Also, how do you educate end users about the privacy policies? So those are some of the challenges that the industry is kind of facing. But arguably, those are the same challenges the industry has been facing for the last 50 years, really. You
started off by saying, right, open banking in a way through screen scraping has been around since the 2000s or so, which is absolutely right. And compared to that, open banking is a much safer and a much more controlled environment. I still see, like, as you said, in the US, it's much more prevalent, and Visa paid $5 billion for Plate, ridiculous amount of money. All they do is we really give them your username and your password and full access to your account. That makes me nervous. Giving somebody limited access via an API that is controlled is much more comfortable. Take a quick look at the customer base, because we're talking about you and me. Is that an implied consumer focus there, or do you do the scoring as well for SMEs, for example, based on the account?
Our core purpose is to add value to account information and to help our core audience, the banks, the lenders, and the FinTechs, to solve their bank data related problems and challenges. We're a mirror of where the market is. And today, a lot of the market is really in consumer banking, helping to solve the challenges that the regular people have with things like getting access to loans and affordable financing, or to be able to verify their creditworthiness digitally. which is something that's a must-have, an absolute must-have today, or to perhaps shorten the time to onboard yourself to a new service. These are some of the challenges that are extremely burning, and these are some of the challenges that open banking is quite successfully solving for many of the people in the financial area. And so we see that this is really driving the open banking adoption. In a way, this is also where most of Nordigen is spending our time in the project, is how to help these B2C banks, B2C lenders and FinTechs to help them, solve the challenges they have so that they can, provide better services to the end users, the consumers. We definitely see a big potential on the B2B space as well, but the B2B space is still developing, and there's other challenges the B2B space is having. One of the challenges is that, SMEs have always found it really hard to get access to affordable financing. For a bank to finance SMEs, they need to have a fully automated process. Otherwise, administrative overhead is just too big. There's a couple of shifts that need to happen. There needs to be more digitalization in the SME lending process in general. There need to be more technologies, because not all technologies are built just yet so that the process can exist. And I think open banking solves some of those issues, but it's not the only thing, and it's not even the largest thing for SME lending in general. Nordigen, we had projects on SME space and B2C space, and we've also worked projects with large corporates. So we've done a lot of different types of things, but I think right now the biggest chunk of the markets, at least from where we see on the open banking front, is definitely on the B2C. And once you're able to solve the challenges for the regular consumer, that's a good grounds to build upon when you're trying to solve the similar challenges for SMEs and then for larger enterprises as well.
Agreed. And clearly the open banking regulation that we have is focused on the consumer and not on the corporate market. But I think there were a few comments in the pandemic where we had these support programs like a CBILS in the UK, that if you actually had similar open banking access, would be much easier to apply for the loans, because you just give them access to your transaction history and you can see the revenue dropping off, etc. So certainly under these emergency conditions, it would have been helpful.
And open banking is definitely a valuable asset to consider as part of B2B financing or financial services to B2Bs. Because one pretty major challenge right now for any bank is that if you're asking for balance sheets and cash flow statements, the official documents are great, but for SMEs, they're not the full picture. And the bank account information is really where the meat of the information really sits, because you get to see exactly how reliant an SME is on some specific key customers and how are they performing. And if you know the customer names, you can actually test and check how well they're actually performing as companies on the market. And so open banking is opening up a lot more information on the actual situation, actual financials of SMEs. Unfortunately, that's not the only thing. But the other thing is that, yes, you're able to answer all these questions, but then most SME lenders have to build processes that are really digitalized and very lean, so that the cost to evaluate every single loan applicants on the SME market is very low, but also the acquisition costs, they're not too high. You're able to provide the service at an affordable rate.
The way you described it, where there's this data cleaning, data scrubbing that needs to happen, enrichment to a certain extent, and throwing out transactions that you don't need. And then there's the analytics component on top of that. Is that a good description of your product? And do these two pieces always come together, or do you have customers who just use one or the other?
In most cases, both of these types of products go together, because many of the companies that are doing analytics today recognize that had they only been cleansing the data significantly differently, they would have gotten to more insights that they have right now. Interesting problem is that if you're not able to, for example, categorize transactions accurately, you're not able to get accurate insights on top of the data. If the algorithms are not powerful enough on the lower part of the process, then what you're going to have is faulty outputs as well on the top. And also, interestingly, that even if you have spent a lot of time on data cleansing and data enrichments internally, quite often there is just not enough time to figure out what kind of insights can you generate from this data. And so open banking is kind of a super new thing, right? So there's not a lot of data scientists in the world who know what to do with open banking data. Compare that to credit data, the traditional credit bureau data. Credit bureau data has been very much mainstream for the last 50 years. So there's quite a lot of methodologies and industry know-how around how to work with the data? How do you get most of it? How do you apply it to different customer segments? And so there's a lot of documented stuff. If you're building a new bank today, you can definitely find someone who's done that thing before, but not with open banking data. So you literally, every time you plug into open banking, you almost have to build your own tiny R&D team. So you have to figure out what it is that you want to extract from this data, what it is that actually has value to you from open banking. And then you have to figure out how do you to layers of technologies that you need to have. And so when we're thinking about Nordigen, we started clearly step by step. We started with the simplest technologies to build, and we gradually moved up. And then now this allows us to work with companies at different stages of sophistication, really. So we can work with tiny companies that all they want to do is maybe automate a couple of processes here and there so that they can move tiny bit faster. But we also can do projects with very advanced data science teams who are like professional athletes. They're pushing for the maximum margins, and marginal increases are still increases.
Yeah, I was probably thinking more at the lower level. So seeing like Tink, for example, has a pretty good looking SDK to build a personal financial manager. That's fine. You can create something basic out of the box in a couple of hours, literally. Then you have the problem, okay, I have access to the data, but I don't know what the data means. So then I was thinking, take your enrichment engine, plug it in. So at least the data displays nicely. And then you have already a standard account aggregator, basically. And yeah, if you then want to use it further to actually make loan decisions, then I need much more information and move up this stack. The components that you need for something like a PFM these days with companies like you, with companies like Tink, just almost like Lego, can assemble that very easily. You almost don't need to build anything yourself anymore because it's being industrialized as a process. And as you described, this is typical also, I would say, German and Japanese industry is SME. Classic car manufacturers where you have the suppliers and they're really focused on the niche. They make one small product, but they make it for 20 million cars and they are the best in the world. It's in a way you described your company too. So that resonates very, very much. And industrializing these parts individually and then aggregating it back together in a full functional scope is super interesting. But it also means that the banks need to watch out because it's easy to build challenger apps, right?
It is, and it's great for the end consumer. And that's a very big motivation for a regulator to push something like open banking. You get to open up an industry that otherwise very steady and predictable. I think the more you are opening up this industry and the more you're allowing new technologies to be built and new challenges to be created, the more you have a place where consumers can actually get access to the best possible services there are. There are already technologies, modules that you can stitch together. You can take an account aggregation module, take the best that you can, and for that specific markets, and perhaps maybe for a set of banks that you want your consumers to connect to, you have like the best, and then you take the best categorization engine you can find, and then the best insights engine. And then you have suddenly so much time that you can spend on just building the best and most unique customer experience, which is really at the end of the day what you want. I don't know any founder who's been founding a PFM app who would be super excited to build the infrastructure. They're actually thinking about the customer experience, and they're thinking about, well, how do I solve the customer problem? And this is not an infrastructure problem. This is a user interface problem. This is a user experience problem. Otherwise, without all this infrastructure, there's quite unlikely that most PFMs of the future would be built, right? One of my favorite examples is that when Google Maps was created, Google Maps never anticipated Uber. And open banking is going to have that Uber moment as well. There will be an app that will be really amazing and will be built on top of open banking. And had there been open banking, we would have likely not have that Uber of consumer finance.
It's a great comparison. And so it's ultimately also what you're saying, the robo-advisors that we have today should just focused really on investing. That's just the first step. But ultimately, we end up with something that guides you through your financial well-being for your whole life across all aspects of financial services.
Absolutely. That's the dream.
Okay. We'll get there. Coming back to your origin, what I read about you in Nordigen, the first countries you went into, and it's one of these puzzles where you get like 4 nouns and one doesn't fit, I think. The first countries were the Baltics, Poland, Spain, and Finland. So How did Spain get in there?
One of the strategies that we recognized very early on was, first of all, we need to pick markets where the problem that we can solve is big enough. Early on, the problem that we could have solved was around helping the consumer lending companies to optimize how they evaluate customer income and customer creditworthiness in general. One of the first few customers that we got was a customer who was operating all across Europe. And in fact, they were a company that operated out of Baltics. So really, they fit the description of a Baltics company. They start in the Baltics, and day one, Baltics, day two, rest of Europe. So very naturally for us was that we solved the problem for them in one country. Then they asked, well, can you do more? And we said yes. And this is how we've also done projects in countries like New Zealand. We have clients who operate in Europe, and they were interested to help them solve the same problem really in other countries. And because of that, we're able to solve the same problem in New Zealand and in Brazil and in Mexico. Many of the countries where I've actually personally have not been to. Following your customers is something that I've heard many companies have done strategically, very valuable tool to have under your belt. And that allows you also to test which countries are at what kind of state in their adoption of open banking. And now we know very well what's happening in Brazil, and we know what's happening in Mexico, and we have a good idea what's happening in New Zealand.
I must admit that wasn't quite the answer I was expecting. I was hoping a bit for the Banco Santander, BBVA being quite innovative, but the following your customer from the Baltics obviously makes sense. Quick question on your funding situation, because you had a seed funding round in 17-18, raised a moderate amount of money, I would say. And so good for you. That probably means that you're still holding lots of the equity. Does this mean by extension also that you're essentially self-funding through being in 19 markets, having a solid customer base, and you're basically funding growth from revenue?
From very early days, we made a conscious decision that we'll be focusing on revenue first. And that means that we're focusing on sustainable growth. We're focusing on being able to ensure that we're not dependent on financing rounds. And for a long time, we just thought that our strategy is good enough it's a careful strategy, but it's also a strategy that's good enough to build a sustainable company. And we've been super lucky that this year, with the pandemic in place, we've been able to sustain the company in a way that we really wanted to. And we have not been as badly impacted as perhaps some of the other companies out there, which is very unfortunate. And it's not really the company's fault at all. And so just by being very careful about revenue, being very careful about building sustainable growth, and by being careful of not taking too much of external capital, we've been able to afford to be in a position where, well, we can pick the projects we're working on, and we can pick the markets we're going in, and we have less stress, which is, if you're a company that's funded a lot and you have obligations and patience towards everyone, the team, the investors, the founding team as well, there's quite a lot of stress that comes along with it. And so for us, that just meant a tiny bit less stress, which is great. Sort of the industry itself is changing very fast, but at least we don't have to think about funding as an issue.
Absolutely. It's fantastic outcome. Rather than burning through venture capital to fund yourself, being self-sustaining is absolutely fantastic. You were awarded the payment license in Latvia also in July, so you've actually taken the formal step to become an account information service provider under the open banking regulation. What stands behind that, and in which way are you going to use it?
So it was a very conscious decision. We have always wanted to be more flexible with the services that we provide. Having a regulator-approved license that Nordigen can provide account information service if we want to is great. That just means that we have more services to offer to existing customers, and we're able to just build more value. The great thing about open banking today is that it's significantly more actually open than it was a year ago. And today, more and more banks across Europe have great APIs, and APIs that actually work, which is not a small thing, really. Now, we said that now is a good time to have a license under our belt. In case we need it, we can use it for some projects where our clients want to get a full set of services from Nordigen. But that in no way really changes what Nordigen is at Cedessa. Like I said in the beginning of the show, we still are an analytics company at our heart. Providing insights on top of open banking data is really what we're all about. And so becoming regulated is just kind of another confirmation point that our banking clients can really trust us. And we're regulated by the same institutions that's the European banks, which is a sign of quality as well. This is something that we just thought is an important milestone to achieve. And we're super happy that we're able to do that. When you look at the open banking landscape, and even Europe in that respect always split into the UK, which came first, and then the rest of Europe. What has changed really over the last 2 years? Arguably, open banking has barely started. The technologies that were used 20 years ago are still some of the technologies that are most prevalent all across the world today. Open banking, in terms of actual regulated APIs, is quite active in a couple of countries, but not nearly there in most European countries. That means that it needs a lot of development. It needs quite a lot of development. We've seen a massive progress in the last couple of years, and that's driven by several things. Like, first of all, it's driven, regulator enforce the API creation, and that has been a major shift in everyone's head that's sitting in the traditional banking institutions, because that's going to be the new reality. Quite likely there'll be this movement of open banking is going to turn into the movement of open finance, and after PSD2 you can probably expect a PSD3 and 4 and a 5. So there'll be a lot more things that increase the competition on the market. And because of that, we've also seen that companies outside directly of the financial services have started to recognize that this is not just a technology hype. This is actually that's a movement, and so that's something that's worth to invest in. Not only have we seen that the open APIs are becoming better and better every day, not only do we see that the adoption of open banking is increasing, but then the use cases around it are also very much increasing. What we can definitely see is that the access to data is becoming a commodity. The price to actually aggregate account data, like PSD2, mandates that it's free, but the account aggregation services are still paid services in a lot of cases. There's a definite commoditization of the service, which is great for anyone planning to use open banking technologies in the future. And we're also seeing a lot more creative applications in spaces outside of directly finance. Which, my favorite example is real estate, where you see real estate companies actually thinking about customer creditworthiness verification in the same way that someone like a FinTech would. So you definitely see these spillovers from the financial industry into the non-financial use cases. What also helped is the fact that you have the market is shaping and reshaping. And right now we have abundance of choices to work with. In Europe, there's about 300 AISPs already on the markets. And you see that the growth of how many AISPs are created every quarter is huge. The future looks very bright, and I can only hope that the speed would continue and that there'll be spillovers, also outside of Europe.
I'm glad you mentioned real estate. So I'm always pulling the leg of my insurance friends. And I think that's where the labeling of open banking hasn't worked, right? If I was an insurance company and at this point outside of Australia, which has a cross-industry regulation, I'm not obligated to open my own data, but actually could do what you've done, or could some hype on somebody else's AISP license to pull in the bank data and make this available to my insurance customers together with the insurance data that only I have access to. It's an unequal playing field that the regulator has created. And because it's called open banking, none of my insurance friends, they're thinking about this at all. For them, it's a different industry. And that convergence that you described right now, which I'm fully on board with, will happen over the coming years. They don't see that yet.
And that's fine, because no one actually saw that open banking is going to be a thing in Europe until it was. And now you see that those companies who are most thoughtful about the future, they were prepared very, very much in advance. But like with technology, the challenge is always follow the exponential growth and exponential rates of adoption. The human mind is not wired to work with exponential numbers. It's very easy to miss the signals, even though you have the data in front of you. The opening up of banks is only followed by the opening up of other institutions like investment and insurance and the credit bureaus as well. And so we're going to go from open banking to open finance to eventually open everything. Nordigen will still continue to do cleansing, and perhaps at some point we're going to go from open banking data to open finance to open everything data. But I think the core value of it still is going to remain.
That's fantastic. I think we covered lots of ground. Is there anything I should have asked and didn't? Anything else you'd like to say as a final comment, maybe?
Open banking is a complex concept as it is, without going into open finance and open everything. One of the things that I'm fascinated about is to have discussions about the use cases. And so for anyone who's learning about open banking, one of the immediate things is, well, how does it actually work and where can you use it? And I'm super happy to be useful as a resource any point in time whenever I want to discuss this. On a concluding note, I'm more than happy to discuss open banking with anyone, and feel free to connect with me on LinkedIn or to have discussion on Twitter. LinkedIn is probably the medium where I'm most active in.
Great conversation, Rolands. Really appreciate you taking the time and sharing your insights and journey with our listeners.
Thank you so much. Thanks for having me.